Okay, morning everyone. Looking at the US stock markets, the Dow has again recovered from this 24,000 psychological level. Since then, we did see a good breakout above the 24,500 points. Subsequently, the Dow breached above the 25,000 psychological level towards the 25,200 points. After hitting the 25,200 points, we did see some of the renewed weakness on the Dow Jones Index as the Dow Jones falls for the past two consecutive trading days. So for now, we are taking this as the potential breakout, the pullback, and the continuation pattern for the Dow. Firstly, to retest the previous peak around the 25,400 points towards the 25,800 points level. In the meantime, should a fall below the 24,500 points, we see a correction phase on the Dow Jones Index. The weakness was over the trade tariff US stock markets. On a similar manner, the S&P 500 was traded recovering from the 26 or 2700 psychological level. Since then, we did see a good breakout above the 2750. Subsequently, the S&P 500 continues to ascend higher towards the near the 2820 level. Similar with the Dow, we did see some of the S&P 500 over the past couple of days, just closing marginally above the 2800 psychological level. So for now, we are taking this as the potential breakout, the potential pullback to and a continuation pattern to retest the 2870 points. In the meantime, a fall below the 2750 on the S&P 500. Okay, some updates on the crude prices. The crude prices was traded in a volatile manner from the recent peak of around the 75 US dollars barrel level. Since then, we did see a pullback just towards the 66, and subsequently we did see a recovery from the 66. The EMA 20 will serve as a very strong support level for now. Earlier, we did saw the first wave of pullback towards the 63. Once again, it recovered and pull back just towards the 68, 66, which is around the EMA 120, and recovered as well. So for now, we'll be monitoring for the breakout above the 70 US dollars barrel level to see how, should there be a breakout above and a closing above that, only we can confirm for the recovery on the crude prices back towards the 75. In the meantime, should the 66 level, which is around the EMA 120, were to be violated, further pullback will be seen towards the 63 US dollars barrel mark. Okay, some updates on our local front. The FMKLCI has again been beaten down towards the 1660 level. Since then, we did see a double bottom formation was being formed on the FMKLCI along this 1660, and subsequently we did see the W-shaped formation breakout. Following the breakout above the 1700 psychological level, we did see the continuous buying support among selected heavyweights towards the 1760. And on last Friday, after rising for the past 9 consecutive trading days, profit-taking activities has emerged on the FMKLCI. So for now, we could expect this to be a potential recovery, a healthy pullback for investors to digest its recent gains towards the 1730, and a potential continuation pattern for the FMKLCI towards the 1800 psychological level. If you look at the weekly chart, the FMKLCI is certainly on a potential on a recovery trend. It has been been beaten down towards the 1660 level, and on the previous 2 weeks itself, we did see the bullish engulfing candle was being formed, and the confirmation was noted on the weekly chart on the FMKLCI as the key index closed above the EMA 120 and so the EMA 9 level on last week itself. So this could be a potential longer term breakout, pullback, and the continuation pattern towards the 1800 psychological level. On the lower liners or wise, earlier we did mention that the bullish engulfing candle will serve as a very strong recovery or or the potential technical recovery on the FBAM small cap index. Subsequently, following the bullish engulfing candle, we did see the lower analysis continues to recover towards the 14,560 points. So for now, we need to monitor for the breakout above these 14,560 points for us to see further recovery towards the 15,100 points level. In the meantime, with the slight overbought condition on the FM small cap index, any recovery from now is you have to adopt the selling to strength strategy before the lower liners would reverse their position. On stocks wise, you can watch out for companies like FPI. Formosa Prosonic has again recovered from the recent low of around the 1 ringgit and 14 cents, 14 to 15 cents a level. Since then, the FPI has recovered and rejected the EMA 120 level, which is around the 1 ringgit and 64 cents level. Subsequently, we did see the pullback happens, and the FPI have been traded on a sideways manner. However, over the past couple of weeks, we did see some of the accumulation was taking place on our FPI company with some of the improvement in our volumes being traded. For now, we need to monitor for this breakout above the 1 ringgit and 44 cents level. Should there be a breakout above the 1 ringgit and 44 cents, then we can trade FPI firstly towards the 155 towards the 1 ringgit and 65 cents level. So the first target price is at 155 towards the 165. Your stop loss point will be located towards the 1 ringgit and 34 cents level on FPI. On micro MB, price is still on a downtrend formation, so any recovery from now will be just taken as a technical rebound play. But the good thing on the micro MB now is that we are seeing a potential bullish divergence signal. Price has been trading lower, but the MACD indicator has been creeping higher throughout this period of time. Subsequently, price has been consolidating between the recent low, which is around the 27.5 cents towards the 31.5 cents level. For now, we need to monitor for the breakout above the 31.5 cents for us to confirm for further technical rebound towards the firstly towards the 34.5 cents level towards the 36.5 cents level. Your stop loss point will be located towards the 29.5 cents, and if you can take further risk, the final defense will be located towards the 27.5 cents level. On Puncak Niaga, price has again staged a strong rally towards the recent high of 69.5 cents level. After hitting an intraday high of 69.5 cents, price has formed a shooting star candle, and the reversal confirmation was noted on the next day itself as price formed a bearish candle. Subsequently, we did see Puncak has pulled back and traded on a sideways manner over the past 2 months trading period. On Puncak, we need to monitor for the next breakout above the 59 cents level. Should there be a breakout above the 59 cents, then only we can confirm for the recovery on our Puncak towards the 63.5 cents or even towards the 69.5 cents level. Your stop loss point will be located below the 55 cents should there be a breakout above the 59 cents. Everything appears to be quite positive on our Puncak right now, as you can see that the MACD indicator has been forming the higher low of formation throughout this period of time. The MACD line has been maintaining its stance above the zero level since early part of this month. On Georgetown, price has again been beaten down towards the recent low, which is around the 97 cents level. After hitting the 97 cents, we did see price has formed the bullish engulfing candle. We recovered most of its previous few days sessions of losses. Subsequently, price traded in a sideways manner. But the good thing on Georgetown is that on last Friday, we are seeing a price attempts to break out above the 146 cents level, but it not close above that. So we need to monitor for the price to break out above the 146 cents for us to see a further technical rebound towards the first target price at the 1 ringgit and 70 cents level towards the 1 ringgit and 84 cents. So the first target price is at 170 towards the 184. Your stop loss point will be located below the 1 ringgit and 35 cents level on Georgetown. Last two company for the day firstly will be a Matrix. Matrix Concepts Holding Berhad has earlier recovered from the recent low of around the 1 ringgit and 85 cents level, forming a double bottom formation. Subsequently, price has recovered. It rejected the EMA 120, subsequently pulled back and forming Recently, we did see some of the bullish candle was being formed on our matrix again. With the bullish candle was being formed as price close above the EMA 60 level on last Friday, we are seeing the MACD indicator has already issued a buy signal, whereas RSI continues to maintain its stance above the 50 level. On our matrix, we need to monitor for the this trend line breakout above the 2 ringgit and 4 cents a level. Should there be a trend line breakout above the 2 ringgit and 4 cents, then we can trade our matrix towards the 210 or even towards the 2 ringgit and 16 cents level. Your stop loss point will be located below the 1 ringgit and 96 cents level on our matrix. Last company for today will be Atomic. Atomic has been on a sideways trend with some of the higher volumes of being accumulated throughout this period of time since March towards recently in July. Price has again recovered from the recent low of around the 70.5 cents level and traded just towards the 85.5 cents. So for Tommy Pack, for now, we expect the range bound pattern to continue, that we are seeing some of the mild upside towards the 85.5 cents until we can see a breakout and a closing above the 85.5 cents. Only we can confirm for Tommy Pack to trend higher towards the first target price at the 95 cents level, with your stop loss point located below the 77 cents should there be a breakout above the 85.5 cents level on Tommy Pack. If you have any questions, you can put in the chat box and I'll reply shortly. There's some question here on from JB. UA development has learned if you adjust USA development's dividend, because the dividend is quite substantial on this company, you are actually seeing just the sideways formation and the breakout above a symmetrical triangle formation breakout recently above the 2 ringgit and 42 cents level. The uptrend in depth orientation formation was also recently re-established. The MA 9, 20, 60, and 120 has been in line and accompanied by some of the rising volumes being traded on UA development. With that, we could expect further upside on UA development towards the 255. That will be the immediate target price for now, followed by the 2 ringgit and 70 cents level. So the first target price is at 255 towards the 270. Your stop loss point will be located below the 2 ringgit and 34 cents level on UA development. So a lot of property developers are on the recovery trend, not just like UA development, UM Sunrise. You have like your Tampan Indah, just now I've mentioned Matrix as well. So a lot of property developers has been on the recovery play for now. However, on Sunrise, price has again recovered from the recent consolidation between the 68.5 cents towards the 75.5 cents level, towards just the near the EMA of 120. With the some of the three white soldiers were being formed recently, and also the overbought position on UM Sunrise. Any pullback for now will be a healthy pullback for investors to digest their gains before the next upward rate to resume towards this next target price, which is located towards the 89 cents or even towards the 92.5 cents level. But if price were to reverse below the 75.5 cents, then it's better to quickly lock in your profit or cut loss immediately. Corex is on the technical rebound phase. After hitting the recent low of around the 50 cents level, we did see price headed towards the EMA 120, which is around the 94.5 cents. After touching the 94.5 cents level, we did see the bearish engulfing candle was being formed and the pullback happens. This is a healthy pullback that we are seeing for the first wave of our rally. This could be a potential pullback and a sideways formation. And the good thing on Carex is that we are seeing the short-term breakout above the 85 cents level on last Friday, accompanied by some of the improvement in volumes, suggesting that this could be the breakout, pullback, and the continuation pattern for Carex. Firstly, to retest the 94.5 cents towards the 1 ringgit psychological level, your stop loss point will be located below the recent low, which is around the 76.5 cents on Carex. A lot of furniture related companies like Home Rates has also been on a recovery trend for now. So Home Rates has earlier pull back towards the recent low, which is around the 61 cents level. Subsequently, price staged the consolidation breakout above the 63 cents on last Thursday, and the follow-through buy interest was noted on last Friday itself, accompanied by some of the rising volumes being traded. With some of the sharp gains on last Friday, any pullback for now will be a healthy pullback, potentially forming the T plus 4 formation. If you could pull back for the next 3 days before the next upward will resume towards the 71 cents. Your stop loss point will be located below the 63 cents level on a Homo REITs. For Malakoff, price has again recovered from the recent low, which is around the 82.5 cents level. Subsequently, we did see price has experienced the breakout above the 92.5 cents level, accompanied with some of the high volumes being traded. With that, we are seeing some of the potential pullback pattern was being formed on Malakoff as price formed a shooting star candle, but the reversal pattern was not confirmed on last Friday as price recovered all its previous session gains again. So for now, this could be the potential recovery and the sideways formation that we are seeing a potential next wave of recovery for Malakoff. Firstly, towards the 1 ringgit and 3 cents level towards the 1 ringgit and 7 cents. Your stop loss point can be trailed towards the daily EMA 9, which is currently located at the 93.5 cents level for Malakoff. If there's no further question for today, then we'll end the morning briefing. Thank you.